So I've been getting a ton of requests from you guys to cover the oil industry and some oil stocks. And if you didn't already know, I made a video recently a few weeks ago on the oil stocks covering the largest players in the game like ExxonMobil, Chevron, Shell. And in that video, I kind of discussed my thoughts on the industry as a whole. Now, of course, if you are interested in that video, I'll leave a link in the description down below, so make sure to check that out after that video. But what I wanted to cover in today's video is specifically USO, which is a very popular oil ETF right now. I know a lot of you guys have been buying this ETF, but you may not understand how this works because this is not a traditional ETF and there's a high risk here of losing your investment. Now, all I'd ask from you for this video is to drop a like down below. Just show your support. I know this may be an uncomfortable topic, especially if you're currently invested in USO, but my hope is that by the end of this video, you have a much better understanding of what investment you're holding and maybe make an informed decision on whether it makes sense to continue holding it or cut your losses. So take it right from the fund's website. The USO ETF stands for United States Oil Fund, and it is designed for short-term investors, especially for ones who are familiar with the market and who can continuously monitor their positions to invest in short-term future contracts on WTI crude oil. Now, WTI, if you're not sure what that stands for, it's Western Texas Intermediate Light, and it's traditionally been the type of oil that this fund tracks. Now, you may be wondering why this ETF here is specifically for short-term traders, because it is, after all, an ETF, and if you know anything about ETFs, you know that they're typically meant for long-term investments, right? Well, USO is very different from any other ETF that we've covered on the channel here before, so make sure to pay close attention as we go through the details. Now, from inception, this ETF has never once traded so low as it is today, and it's down over 96% from the fund's inception, which is absolutely terrifying. Considering this has been around since 2006 and went through the financial crisis just fine, it really puts things into perspective here with the current price of this ETF. The global issue we're going through is truly testing the demand for oil, and as a result, prices are collapsing and ETFs like USO are crumbling. But as a potential investor here in USO, you may be thinking this is a perfect time to buy this ETF at such low prices and potentially double or triple your investment in short order as demand for oil eventually does pick back up. But hold on to that thought because it's not quite as straightforward as you may think. But let me just first cover a couple more things about this ETF to give you an even better understanding here. Well, because of all this extreme volatility in oil the last couple of weeks, the price of USO, like we saw, plunged recently, and new trades were halted after the fund's managers made changes to its structure in efforts to avoid complete collapse of this ETF. This is big and it is important, so let's take a look more into this. USO announced that it'll begin investing in a couple of different crude oil futures in any month available or in any varying percentages or in non-crude oil future investments without further disclosure. This essentially would turn USO from just holding short-term futures on WTI crude oil into an actively managed oil ETF that can invest in any crude oil future contract across the curve. So if you were interested or invested in USO before, this is a fundamental change in the ETF and its holding, and it has now become a lot more broader and as a result requires a lot more understanding. Now, all these efforts were made because, as you may know, oil future contracts crashed recently and May futures were actually trading in the negatives. And what this did is put USO in a panic because guess what? This ETF actually holds futures, and this means it's in serious trouble. So what this fund is now doing is to make all these changes to their actual core holdings to prevent a crash on May 19th when the June WTI contract expires. Pretty much, guys, the bottom line is if this fund doesn't do anything and just kept it as the way it was before, the fund would essentially go bust. And to top all of this news off, another move USO is making is a reverse split. This will be a 1-for-8 reverse split to help with liquidity concerns for the ETF. An example they provide here is that if you had, say, 120 shares pre-split, you would have 15 shares post-split, but note your dollar value remains the same. Just the share price or net asset value would increase in the situation. And we recently saw the same move in Aurora stock so that they could remain listed on the New York Stock Exchange after dropping below $1 per share. And generally, guys, a reverse split is a sign of weakness when it comes to an investment. This pretty much gives you a good understanding of the background in USO. And what you really need to understand, and the takeaway from all of that, is that the fund, when it first started, has fundamentally changed recently. It used to hold only one type of future contracts, but now it holds different types of future contracts. So the basis and the underlying reason for holding this ETF has changed. So as of recording this video, USO is holding the following future contracts. Keep in mind that each contract here equates to 1,000 barrels of oil. So that means when the contract expires for the month, if you hold the contract, you take ownership of that physical oil. Now we can see that June, July, and August is in here. And on the far right, you can see the value that each of these positions holds within the ETF. So what does this mean if you buy USO today? Well, it means that you are essentially placing a bet that the price you see here for the June, July, and August contracts will go up before the future contract expires. Now, you may be wondering why May contracts aren't in here, and that's because the May contracts have already expired, and now we're looking at the June futures as the earliest. So what's going to happen now is that in late May, the June futures would expire, and if we were holding USO from today, what we would need is that the price of $13.78 for WTI crude to be worth more than it is today. If that doesn't happen, then we would be down on that position and would have to rely on the July and August futures to be much higher to make up the losses. Remember, when the future contract expires, if it's lower than our buy-in price right now, it's essentially a permanent loss that we have to lock in. The same thing will also happen in late June. The July contract would expire, and we would need it to be worth more than it is today so that we could actually make money on that part of the investment. So you can kind of see the problem here is starting to make itself clear now. You're pretty much putting a time constraint on yourself by holding USO ETF. Unlike a traditional ETF like the VOO, for example, which holds underlying stocks, the S&P 500 stocks, you pretty much have all the time in the world for VOO for those stocks to eventually recover and possibly make new all-time highs, and as a result, your investment would make new all-time highs. But with USO, as soon as those futures expire, that's essentially what you're going to be making on that part of the investment. If it expires below the price you bought in, that's a loss that you have to lock in. If it expires above the price you bought in, then that's a gain that you would lock in. This is why this ETF, like I said at the beginning, is meant for short-term traders who are able to track and monitor this closely. The chances of really losing your investment here with USO is very real. Just think about it. Right now it holds futures in June, July, and August. If all of those 3 months have collapsing demand like we saw in May, all of those future contracts would pretty much be worthless, and that whole portion of that fund would again go to zero, resulting in this fund potentially going bust. So if your strategy really was to buy into USO because you think oil prices will recover in the next month or so, you pretty much have to hope that the oil prices not only recover, but sustain themselves, because you need all of your future contracts, June, July, and August, which is what this holds, to be worth more for the overall fund to be worth more. So you kind of see where my issue is with this. You really have to have a lot of things aligned to actually make money on this investment. Really at the core of it, guys, this is all fueled from the global issue. There's literally little to no demand for oil globally, and this is what's causing a lot of fundamental issues with companies and with oil all over the world. In some cases, for some companies in the US and Canada, it actually makes sense to just not do anything, not drill out any more oil, because they would essentially lose more money if they try to drill out that oil than if they just sit there and did nothing. And that obviously cannot be sustained over the long term, which is why a lot of these smaller oil companies could potentially and very likely will face some sort of bankruptcy in the coming weeks. Now, I think the large players like Exxon, Chevron, and Shell should be fine through this. They may actually go and try to buy up some of these smaller companies if they do go bust. But as you can see, fundamentally, this whole industry is struggling right now. Things are not looking good for it. And that is why I think a lot of beginner investors suddenly have a new peaked interest in ETFs like USO, which is very dangerous. Now, the last thing I want to cover in regards to this ETF specifically is pretty much like the icing on the cake here. If it wasn't bad enough that you could be losing money from the share price dropping in USO, you also get charged a management fee for holding this ETF. The management fee is 0.45% and total expense ratio is 0.73%. And this will need to be paid regardless of if your investment is up or down, so keep that in mind. Now, in my opinion, this is a very high management fee for an ETF, and is yet another reason why I will be personally staying away from USO. So yes, if you ask me, there is a very real chance, a very real possibility that USO could be going to $0 in the coming months. But does that mean that oil is going to be irrelevant in the next few months? Absolutely not. Oil is going to be around for a little longer than we think, but it does not mean that funds like USO will still be around. I think the larger giants, like I covered multiple times already, are going to be around. Again, if you want to check out that video, link is in the description down below. And I think that if you want to have exposure to the oil industry right now to benefit from the possible recovery in oil, kind of the sector as a whole, that's probably the best way to go about this, and is probably how I would personally be investing in this industry. But that doesn't mean I will be buying any of those companies. It's just saying that if I were to pick something in the oil industry, it'll probably be one of the giants. But for now, guys, I'm continuously closely monitoring USO. I want to see if this actually does go bust, which is quite possible, like I said. So if you are invested in USO, seriously consider your investment. I hope this video kind of gave you a better idea of what this fund really holds. It's not your typical ETF. And I would strongly suggest you go to their website, look through the holding in details, understand how this works, and then decide if you want to continue holding this and take on that additional risk with exposure to futures in oil. Remember, at its core, USO is designed for short-term traders, short-term investments, quick gains, all that kind of fun stuff. So if you're a long-term investor and you're holding this for a possible long-term recovery, you may actually end up getting hurt over the long term by holding this ETF. Guys, I hope this gave you a bit more clarity on what USO is, how the fund works, and just kind of a better understanding of why I see a lot of risk holding this investment. Let me know in the comment section down below if you agree or disagree with me. I'd love to hear your thoughts. But either way, remember, hit that like button down below to show your support for this video. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one.